What's up, guys? How's everybody doing? Give me a mic check. Get started in a second. Turn the background music down a little bit. How's everybody doing? Happy Tuesday, right? Today's Tuesday. When you get older, you lose track of time. Trust me. Especially if you work on your own. You don't have like you have to implement your own structure into your life. Otherwise, if you're not working a 9 to 5, if you're not going to school, the days just melt into days. Let me just turn this down. Cool, sound is good. Background noise should be going down a little bit. I just want it to be, very subtle. This is Be There by Tea and Sugar and Aya Marar. So I have to find a playlist that I can just let run that is not copyright so I don't get into trouble. All right. Good? Cool. Okay. Thank you for joining. This is obviously on the BlockRoots YouTube. I've done a few streams. Maybe I've just done one, honestly, or two on my new channel. So if you go onto my Twitter page, you'll see there's a link in the header, and that does not take you to this channel. That takes you to Horses for Courses. But as I mentioned about a week ago, that'll pick up in July. So I have a bunch of things that I'm going to be bringing to that channel. Content similar to this, right? Market-related content, but it'll also be mixed in with non-market related content as well. So it'll be a pretty dynamic channel, hopefully. What the fuck is a channel? Excuse me. Got a little bit of caffeine in me this morning. So make sure you subscribe to that channel. So again, on my Twitter page, go ahead and hit that link. It'll take you to a different YouTube. But if you're not subscribed to BlockRoots, of course, subscribe to this one as well. Before we get started, right off the bat, none of this is financial advice. Strictly for entertainment purposes only. The things that I share on Twitter are, just my ideas, how I'm trading the market. One thing they have to understand is, especially with me, being that I'm a more mid-frequency trader. So I'm not a low-frequency trader. I'm not making markets. I'm not taking 100 scalps a day. I'm not a high-frequency trader. That would be a high-frequency trader. I'm not a low-frequency trader, although I do take longer-term positional plays when the opportunities arise. But I more or less fall into that mid-frequency category. So intraday, this could mean that I hold a position up to a week, but that's a long time. For me, it could be anywhere from 20 minutes to 2 hours, but I think my average trade lately is around 2 hours. So that's, that goes up, that goes down. But when I share an idea on Twitter, so for example, I shared a Solana setup. I shared the idea behind the setup, where I thought it was going, but I also posted that I took some profit too. So it's important to understand, if you're following along with me, don't try to trade along with me. Hopefully you take something that you can apply and you learn something that you can apply that helps you build your own system, but do not try to treat my Twitter like a copy trade service, because I promise you I will be in and out of positions in a way that will blow your mind, especially when it comes to, in a way that will blow your mind. What a Donald Trump thing to say. When it comes to changing my mind, rather. There's probably not a lot of people that can change their mind like I can. And I shouldn't say that, because I think that any really good trader can change their mind on a dime. Obviously, when new information or new things are presented, new evidence is presented, right? Or maybe not even new evidence, right? It might be a certain amount of time that passes, and a good amount of my positioning is based on setups taking place in what I think should be a predictable manner. What I think should be a certain window of time. And if they don't, that time component for me sometimes is the reason that I exit trades. So when I get into a position, I want to get paid fast, meaning I want the position to be in the money. I don't want to sit on a position that's kind of chopping around. I'd rather get out of something and get back in it when it starts behaving. But then I also get out of positions. I don't let them run for a really long period of time. Okay. Let me say good morning to everybody. So I have two-screen setup today because the market is moving and the opportunity presents. I'm going to try to focus on the stream, but I also want to be able to take trades. So as you can see, I have the setup that you're looking at right now, the TPO. I have a Binance footprint chart. It's a 15-minute. I'm not really looking at granular order flow right now. I'm more or less focusing on where value is developing. We're still in a very rotational context. So you're either rotational, you're imbalanced. We looked to imbalance up, but we fell back into a rotational behavior. I'm looking for any kind of offside positioning. There's no major inkling of that yet. It looks like there might be some accumulation of aggressive longs at this local high, but it looks like we're kind of seeing that already begin to unwind. But I'm not like looking at the 1 minute footprint chart right now. I think that we've kind of worked away from where the bulk of the volatility came in, which was earlier last week. Is it 2 weeks now? I don't even know. When we sold off into and made the initial low, when things are really zipping around, and I'll focus on like more granular low time frame stuff. This is like during liquidations, during these cascading moves, where I'm focusing on spreads, focusing on imbalances and looking at the lower time footprint. As I say many times, like the footprint is like the cherry on top. It's not like the make or break for any particular trade or setup. There's definitely like nuanced setups that are derived just from the footprint, but 9 times out of 10 they're not. So again, all right. So let me say hi to everybody. Like I said, I was going to. Cornholio, what's up, man? Cornholio is always in the #1 comment spot. That is commendable performance. Mr. K, what's up, bud? Long time. Asgard, what's up, man? Dodana, PBJ, Peanut Butter and Jelly, what's up? Ryan, good name, man. You know what Ryan means? It means little king. You could be a big king though. I'm not a little guy. So, Boov, Lord Samurai, what's up? Incoming. Mark Welton, Yentai, Thizzacake. Yeah, good trading day today. Yeah. Yesterday I had a good trading morning, and then I kind of I gave back some of my returns, not all of them, but I got a little bit chopped up. We'll go into that. But all right, so a couple thoughts. We're still in the fallout period from the whole 3AC saga. Just a reminder, and again, this is a good reason for you to read the book When Genius Failed about long-term capital management. We're talking about the most respected, emulated fund in the space, can do no wrong, huge personalities in the space, and look what's happened, right? Absolutely destroyed. They were the ones that basically broke the market, right? So there's still more than likely some smaller bodies that haven't washed up. And this is like a thing that I've been saying for the last couple of streams. There's bodies that are still going to be floating to the surface. Seems to be a pretty popular way of talking about it recently. Everyone loves the bodies floating to the surface analogy. But that's the truth, right? We saw issue with CoinFlex, $47 million, right? A $47 million debt. That, I think that is from Roger Ver, apparently. Ooh, right? But they're now offering some kind of token that allows you to have, it returns 20%. Like, can you make this stuff up, like, and do a better job of creating this fiction? I don't know. I mean, this is absolutely, for those of you who've been following myself and for BlockRoots, Josh, for a long time, you know that when CoinFlex came out, it was myself, Josh, and the Crypto Dog that were working with them initially, right? And we actually abandoned that. So the exchange never really caught traction. I liked it, and I wanted to, partner up with them and work with them because they had trading technologies integration. And for me, that was like, it was very easy because I'd used trading technologies before, and I thought, oh my God, this is amazing. Like, this crypto exchange is not going to be like the other crypto exchanges that have, garbage UI and, the same kind of template from exchange to exchange, that web template that it looks the same. It's just like every platform roughly looks the same. You have minor differences between, Phemex, and FTX and Bybit and Binance, but CoinFlex had trading technologies. They had like an advanced trading technologies interface that you could use. So I was really excited because that looked like, the setup that I use that's now Quant Tower, and I used trading technologies in the past. So that obviously major flop on their part. They never really got any volume anyway. They had, some decent offerings on the platform when it comes to like automated capture of carry trades and basis trades, and buying near-term spot and then selling futures. And this is all like set up in a pretty user-friendly way, even though it's not a very difficult thing to do. But they completely flopped. And I think Crypto Dog actually earlier on, like, he realized some things that were a little bit questionable. And anyway, we stopped working with them. So that was a good idea, right? Because if we still worked with them to this day, and by working with them, I mean like sharing their platform, if we were going to be sharing a link. If we still worked with them, that we would be hearing it all over Twitter. So we have a fallout that's still falling out. Stocks bouncing, right? So we had some tailwinds recently. Listen, when it comes to stocks, we had oil down, we had yields down. Now oil's back up, yields are back up. You want to see commodities come down. So if commodities peaked, if oil peaked, that's really good for risk, right? That'd be really good for us. That'd be really good for the S&P. But we're still in this position where there's a ton of uncertainty. We're still in, as I've said, for the entire year, an unfavorable policy in terms of our environment. We are in a non-accommodative environment versus an accommodative environment. So, if you're trading right now the long side, it's short-lived because you are fading the Fed still. So it has to be short-lived. But when it comes to the bigger picture, one, in hindsight, right, what would be the best thing to do during the next crisis? It wouldn't be to long, growth and momentum. It would be to shift from growth and momentum to, value in something like high dividend yield, right? So crypto is, falls in that sort of momentum and growth bucket, or trades similarly to it. So I think recently with stocks, when we saw, and this is, I still believe that in the next year we're going to be bottoming. So I said that Bitcoin, I think, is going to be bottoming by the end of this year, meaning put in the low tick, right? And then this goes on. This doesn't mean, I didn't say specifically Bitcoin's going to bottom and then be reversal. I said the low tick, right? Meaning the low would be put in by the end of this year, and then hopefully we're grinding our way upward by next summer. So, I ruffled some feathers because I said beginning to bottom. So immediately, most people on Twitter, when you say beginning to bottom, they don't think beginning like the starting point, right? Which means maybe the long, drawn-out process. It might look like a accumulation bottom. It might look like an Adam and Eve. Like, think of just generic bottoming structures. But we're at the beginning is what I said. And this is something that can create a very long accumulation structure. I'm gesturing with my hands as if you can see, but you can't because I can see the box is kind of tiny. But no, we haven't bottomed yet, right? We have absolutely not bottomed yet. We're still in a bear market, right? We're still dealing with non-accommodative policy. So anyway, the one thing though that is, all boxes are checked when it comes to like what you would want from sentiment, from participants, from positioning, to look for a temporary kind of larger rally in a bear market. Even Druckenmiller talked about this. He talked about being only long. I think, I think he was only short 5 or 8% of stocks. And he was prepared because he didn't want to be too short because he believes that we're looking at some kind of longer bear market rally. What we've had is not a bear market rally. I mean, we're having these small bear market rallies. They're small though, but we're talking about a real bear market rally is something that almost brings everyone back into the idea that we're back in a bull market. So what this means is with a significant bear market rally, we'd have to overtake something like, I would say at least 4K. But I would more or less think that you'd get something that would be back up here, right? And this is what I said earlier in the year. I said, hey, we could be in a bear market, but we could be just going sideways for a really long period of time and have multiple tests at this high. And that wouldn't be abnormal. We've seen that in the past where it doesn't lead to continuation and we just continue to attack the lows regardless further on in time. So that's what I'm talking about when I'm saying like the bigger rally. I don't think that it's, something like this. I don't think that it's these. These are like, these are counter trend rallies that we have on the way down. But a bear market rally is literally where most people start thinking that we're back in a bull market. And that's where it's really difficult because you are, you're suddenly exposed again. You're probably in the money decently. It feels good to be long and strong. You're getting paid for it. And then that thought has to sit in the back of your head that it's not going to just work itself out like this, right? And we still, unless inflation starts coming down dramatically, unless recession fears are off the table, yields are back down. Unless we have that coupled with this, then you at some point have to take profit, right? Because what we've had so far is not what you would consider like the bear market rally that a lot of times you could expect. I hate to use the word expect because it sounds like too certain. By all means, we can just continue down, and what I say doesn't matter. And we have to trade what is, not what we want. So the one thing that I think is really, it stands out right now is that now contrarian has become consensus. And this is something that, a pretty popular macro trader, I can't remember his name, ex-Goldman guy, he's an Asian gentleman, damn it, I'll share it, I'll if I can remember it, I'll say it, but I'll share it on my Twitter. But he made a great point, and I'm sorry to go on this this rant in the beginning. Not a rant, but to not get to the meat and potatoes that you guys like. But as I'm licking my finger to wipe something off of my mouse mat, so his point that contrarian has become consensus, I think, is great, and I can't really see anybody who is bullish right now. No, I didn't call bottom, Vin. I can't see anybody who is really bullish right now. I just see everybody who acknowledges that things are only going to get worse, that we're at the beginning of a recession, that the S&P has much lower to go, that inflation is going to increase. Maybe all these things are true, but I've never seen the market so tip to one side, right? And you know what happens, tipping to one side of the boat, right? Putting too many people on one side of the boat. Leaning on the table with your elbows with the table that's not built properly. I'm thinking of all these things. As a kid, you ever lean on the table and you fucking flip the table in your kitchen and your parents, almost beat you. No, I'm messing around. But I'm trying to just think of physical imbalances. I should just continue, right? So contrarian has become consensus, right? And again, you're seeing it in equities as well. The only things that are moving up year to date are, like I said, high growth, high dividend yield, and value, which is what you would expect in a time like this anyway. All right, so let's let me just look through the questions and I'll get to BTC chart. Yeah, CoinFlex. It was CoinFlex, I think, right? Yeah, they were the first physically settled Bitcoin futures contracts. S&P looking at a proper beat today. Big pump early, then down, and only 8% rally this time, which was less than the previous two, but might be reasonable to consider that. Yeah, let's look at the charts right now. So just to map out some levels that I'm looking at, and in the case that we approach any of them, because I think that we're in conditions where you want price to behave. And that doesn't mean, you try to muscle price. What it means is you set your standards, and if price comes to you and satisfies them, then you trade. So one of the problems that a lot of people have is they constantly want to trade, they trade where price is rather than, saying, okay, here's a key daily level, here's poor highs and poor lows, sort of mapping out the environment and saying, all right, creating hypos basically. And then if you're in no man's land, saying, okay, I'm going to set alerts, go mow my lawn, go play with my dog, go have a life. And then if they get triggered, then I'm going to trade, versus saying, I want to be in a trade right now, this is the bottom, I have to long, or, this is a great place to, short for continuation, when we're not really in a really good location to do either. Unless, I've said before, like if you're picking up spot, I picked up spot around the 200 just for posterity, like I said, which sounds like a joke, but I ended up picking up spot around the 200. Dumped that, picked it up again. So I think 3 streams back, I talked about that already. But like I still maintain that spot position. I took some profit on Solana. Short AVAX still. So either way, like I think there's areas that you should definitely want to get involved, and we're in the center of a range right now. Let me just put it that way. But long term, I'm losing myself because I wanted to say long term. I think that if you're buying with a year to 2 year time horizon, I think personally that you get rewarded with buys in this level. But that is my own opinion. With BTC only, that's as much as I'm going to say, that a year to 2 years out, that these buys get rewarded. Now, the problem is people go, okay, I'm going to go buy, and I'm going to hold this, and then they look at the chart in the 5-minute chart, right, for the next week, and then get in and out of that because, again, they don't have the discipline to actually make some kind of long-term bet like that. So, from a prior week standpoint, we're rotational, right? We already put in the big splash down. So we're far away from any major contextual levels. Honestly, it's not a major contextual level because major contextual levels at this point would be like prior lows up here and lows right here. Minor contextual level, I think, is these local highs, relatively local highs, even highs. This is a 12-hour chart, but if you look at like the daily, this little pivot right here is I would say it's a decent contextual level because right now that is the lower high in the making. If we break above that level, this is not like a gap per se. So if we look at this on like the 30-minute chart, it was a semi-efficient move down. So there's no real gap that occurred. You have a gap down here. You have some liquidation gaps lower, but this was a pretty efficient move down. So it's not like an area that, based on the same kind of principles when we're trading like intraday and TPO, that you would say, oh, price should cut through that like butter. But because of the move we put down and because of the amount of money that is probably still sidelined and looking for just a reason to get long that is, a reason higher, meaning like much higher confirmation, I think that if you do break above like 22K, that you send a bullish signal to the market. And what that ends up doing is, that ends up probably helping you close what on the daily kind of looks like a gap, but on the lower time frames isn't really a gap. But as far as like major contextual levels, on the weekly, far away from the level, any level, prior all-time high is all the way, that's this line right here. We're holding the prior all-time high, so that's good. Spending a lot of time below the 200. We're going on 3 weeks below the 200 now. Excuse me. Major contextual level on the chart, though, that's the most local one, is probably this weekly low, figure like 31K. So back there, meaning if you got all the way back up here, you would look somewhere around here for this to fail, right? Whereas if we reclaimed that underside of that structure, started trading within it, started building back above, that prior range of first quarter, then maybe all bets are on and we're looking back at mid-range and we're looking back at the highs after that. Like that's, these are things I just feel like you say, right? Because it's very if then, but to get there, it's not like as light as I'm describing it. It would imply that things massively changed. But still, most important contextual level on the chart, I'd say that this low is pretty important contextual level. So that puts us, kind of the middle of nowhere from a high time frame standpoint. So I'm only interested in trading basically the extremes of this very rotational range, right? What I mean by rotational is you don't really have any kind of imbalance moves. You have imbalance attempts within, but we faded back. So you had an imbalance attempt above this high, faded back within this multi-day composite, imbalance attempt down, right? Ended up bouncing off this POC. I said 20,400 yesterday. I said area. I should have just looked at precisely the POC. I was kind of looking in a rough area. We ended up front running that a little bit. But again, imbalance down, no continuation though. So still very rotational. So I think the most reasonable areas to expect, aside from, you have intraday levels to play, and we'll get down to the lower time frame in a second. Down here, if we were to break down to, let's say, below 20K, this would be an area that I would look for either absorption, right? So you see that you have some offside selling taking place below here, very quick response by buyers, reclaiming this level and putting in some type of, let's say we splash, and then we're trading back above and holding it. I think that obviously at that point you're just looking at a retest of the underside of the structure, maybe even higher at that point. But still, I think it's important to play level to level. Like I could very well say, break down here, and then maybe this looks like much further back where we had a similar structure, 1, 2, and I think it was 3, and then up. But I think it is important to just play level to level. Let me show you what I'm talking about. This kind of looking somewhat like this. So this is back, this is January of the beginning of this year, right? Beginning of this year, yep. Where you had that high volume splash, first move up, kind of imagining that we're right around here right now. I mean, if you look at that, and then you look at where we are, it's kind of similar. So if anything, I'm going to share what I have, what would get me in sooner in a second. So let's say we didn't come all the way down to 20K and get something like that. And again, absorption here, or if we accept below and you're building like a lower high at this point, I mean you're looking just as at a return back to the lows, right? So that's the idea. Sorry, my dog in the background. She has another head cone on. So if we broke below this low and you got something that continued to drift lower and you didn't see that the buying was responsive and you're not seeing any kind of trap setups, at least from the short side, to get long, then you're looking again at, I think, the second attempt at those lows, which I think no matter what is inevitable. So just to lay out my opinion either way, I don't think that this is even if, I think, let's say we moved up, I think that all roads eventually lead back here either way. Whether that is in a week or whether that's in 2 months, I very strongly doubt that this is the only move that we're going to have towards 17 and doesn't get revisited. So if anything, if you're breaking below like 20K, there's a pretty strong argument for this to move pretty fast. I said that there might be reason. Let me just go to more of a, one sec. This is lined up, right? Let me look at that chat real quick. Okay. All right, so real quick, let me just show you something. When I was talking about, a few questions just to ask, right? If there's no like any major signs that are standing out, or we're not near any major contextual levels, where's value? I'm looking to the left. The camera's up there. Where is value accumulating, right? So are we forming any kind of ranges? Are we forming things that are, reasonably structured into composites? Are we imbalanced? So clearly we're rotational. We're still dealing in prior day's value. We're not really having anything that looks like any trending moves that are sustained. So we're rotational right now. Value the last 2 days is clearly between right around 21.1 and between 20,005. So that's where value is the last couple of days. But the last week we're looking at, what is this? 20,005 we'll say, and 21,006. But positioning wise, is anyone off sides? This is the more recent increase in open interest that stands out. So you could see right here, you go from right around 3.7 billion to we're looking at 4.1 billion. So a pretty big increase in open interest. And just look at prior highs, right? Prior lows, and now we have this move up, and that's the corresponding increase in open interest for it. So I think there's a decent chance that we flush a little bit lower, because I think that that's probably some longs that we're positioning in anticipation of sort of that higher low forming. So getting back to that, sort of this is a, this is your higher low. This is, this is your, we'll say this is the low, this is the high, and this is, this is the higher high, marginally, and then this is the higher low. But this already looks like it's kind of ugly, right? You had a rotation, you had a move down, so imbalance move down, B shape, volume at the lows, right? This is your volume profile. We'll throw on a VWAP real quick. No, wait 1 second. Below VWAP for the last 2 days. So bears are in control, right? Below VWAP the last 2 days. Again, hanging out, if we look at the last 2 profiles, where volume is, so this is more there's distribution up here as well, but where the POCs are. So you want to reclaim the POC, right? If you're creating a bottom, you want to spend less time below, unless there's some really obvious shorts accumulating down here and you're trapping them, which doesn't really look to be the case right now. Open interest is going down in this move. It's not like it looks like you're washing out some of those longs. It doesn't look like there's a whole lot of aggressiveness here yet. Hanging out below this POC, hanging out below, if you have like a B profile, spending all your time down here drifting, usually this B becomes a belly, and that full belly pukes on the floor, right? So if anything, what you would want to see is that POC. I think that I would get long, honestly, if we're trading above VWAP, trading above yesterday's VWAP, which is right around here, and we're back above something like 21K. So you have a structure that we had a bottom back here that was choppy, right? So this is a low put in. Choppy. This is choppy, right? But I would be more confident in not trying to predict this to be one of those bottoms. I would be more confident if I was buying somewhere back up here. So again, let me put on a different VWAP, because that one is dark. Oh, I'll just change the color. Let's not get too lazy on it. As you guys can tell, I have the dark mode on here right now. My poor dog had to get stitches in her ear again. Hey, Freya! Freya! Come here. 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 Want to say hi? Want to say hi? Can you see her? No, you can't. Come here. Come here. Come here. Come here. Come here. Come here. All right. Whatever. She has a big cone on her head right now because she had stitches put in by a shitty vet. And those stitches came out, so we had to take her to a good vet yesterday and get her restitched up because she split her ear. Anyway. See, my streams are different. You get a little bit of my dog. So here's the VWAP that I was drawing just a second ago. So the last 2 days, you could imagine that we're below where most of the risk has come in. So today below VWAP, below POCs, below yesterday's VWAP, after breakdown. So bears are control. If we were able to claim, that's like around, we'll say 21. If we're able to reclaim 21, I would probably get long. I'd probably get long for a target of these highs again. It does have sort of an uncanny similarity to that prior structure earlier this year, where we had and it's not like context is the same, but the idea is the same. It looked like it was going to roll over. You trapped a decent amount of shorts on the attempts down. And finally what you got was you got a much larger squeeze up and a much larger move up that did away with the range that you had built for 2 weeks prior, where it looked kind of listless. It looked like it was rolling over. And then next thing you know, it's multiple percent higher than where it had trouble with to begin with. But I think what you're seeing now is you are starting to see more long aggressiveness. And you see this transition, obviously, after price has moved well off of the lows. Right now we hit above 20. We hit around, I think, from gee, all right, now you got to get out of here because you can't scratch that thing. Hey, please. No, never mind. We're 25% off the highs right now. So you're getting that late positioning, and you're seeing it in the moves up. Like if we look at open interest for each corresponding bounce. So you could see you should be able to see clearly. Let me lower the RSI. So in these moves up, right? Just trying to capture them. It's all long aggressiveness towards the end of the structure, where it's like, late bulls getting in position, and more than likely, I think that without any kind of major short positioning, we probably puke a little bit lower. So again, we'll gladly get behind this if we're trading back above 21, but in my opinion, this probably pukes. We'll see. At least, at this point, it looks like at least we're taking these lows again. So we'll see maybe if things begin to shift. Crypto market analysis, CBD spot seems to stall too. If anything, we'll see what happens when we take that low again. So CBDs the last couple of days, I mean, earlier in the structure. So this is Perp CBD. This thing was, this was the absorption that you had up at the high. So you either took profit up here or you shorted this. So this high and this high, and then look at the CVD that I'm going to expand. This was the high back here, and this was the CVD all the way up. So really late buying, getting absorbed. Again, that's very clear. Whereas now, there's not like, if we have local lows, CVD is more or less following price. If anything, it looks like maybe there's less aggressiveness towards the tail of this, because as you can see, for example, this local high, another local high, and really we don't have that much of an increase in CVD. So yeah, any questions? Real quick, let me go through that. No, that's not the anchored VWAP. I'll go over this in a second. So this is the main chart that I'm using. So again, down here I think is a pretty good area to look for a splash if this ends up rolling over. Where I think that 9 times out of 10 this is going to end up being a long. Let's look at the NQ and the S&P. Oh wow, all right. Yeah, so you don't have any tailwinds right now. So looking at the NQ, looking at the S&P or the ES, where's oil at? Oil's up on the day. So the 2 years back above 3. So we are briefly back in the 2s. So things change pretty quickly. Let me shift. One sec. Was there one other thing I wanted to say before I change the chart up? Hold on one sec. Bouncing now, but seems pretty low for where we are in the market, or majority move done. Do you mean on the VIX? Oh, any thoughts on the VIX? No, we haven't had any kind of major pop in the VIX. That's what everybody's talking about. No spike. But no, I don't have any opinions on the VIX right now. Obviously, it's a good sign for risk when the VIX is moving down, like we had for the last week. VIX moving down, coming down softly. Equities bid. Keep in mind, like I said this a week ago, that we're going into what will likely be one of the largest holidays that you can ask for in the United States when it comes to purchasing. So aside from, Christmas and Hanukkah, and those holidays, 4th of July is a pretty big day for shoppers. And we're closing out the half of the year. So there's some significant flows taking place. Second quarter's closing out. Definitely not a time when you want to really take any major positions. And the LSR is too low. What'd you say originally? Because I don't. ETH chart too. Oh, I'll take a look at ETH obviously. So ETH had some strength against BTC, which was notable. It was notable recently, but I think that Bitcoin is still Bitcoin is like the hand that rocks the cradle. We're not in and I mentioned this is like over a month ago now, whereas people were saying buy the merge, and I kept saying that you don't know where you're going to be buying the merge from, right? And at the time, Bitcoin was like ETH was like $1,000 higher. I can't really see any compelling reason to trade anything until it's showing strength against BTC. So ETH right now showing weakness against BTC. Solana showing weakness now against BTC. AVAX showing weakness now against BTC. So not able to, like, in this downturn, if we were seeing that, either of these pairs or any of these pairs were continuously showing strength against BTC, then it's a compelling reason to maybe focus on them a bit more. But if they're all showing weakness relative to BTC, it only makes sense to really focus on Bitcoin. Yeah, UNFI pumped massively, like a week ago too? CryptoWatch is a great tool, honestly. I mentioned this, and Nomad is close to the creators. So I talked to him through DMs, and he tells me some of the stuff that CryptoWatch is coming out with, because I'll tell him, like, CryptoWatch would be great if it had sound, for example. Because I went back to using the Agar tape. So, for example, I went back to using Agar tape because I could play the sound on this, right? So, your top part of the screen. You can see the dog in the background now. I'm just looking at the new screen. Because I could hear the tape. So I know I don't have to necessarily look at this. When I'm trading and I have this on, I don't have it on for the stream. I can more or less get a feel for what's taking place based on the sound of that flow coming through. Some people talk about it as though it's like the most magical tool. I don't know. I call bullshit on a lot of stuff. Like you're not an algorithm. I don't think that you can really get away with trading on just Agar tape, and that's it. I think it sounds cool, but I said CryptoWatch is a fantastic tool. It's got an awesome. I'll show you. This is CryptoWatch. This is one of my setups. So this is all the books. So I can go through Binance, I could go through Coinbase, I could go through, you name it, perps. I have tapes. I have the order book separated by different aggregations, depth chart. Then we go to, for example, futures tapes. I have FTX, Binance, and then I have a reconstructed larger tape on the right, so I can see all the orders that were much larger, and I don't have to try to find them within the tape. They're kind of stored. It's like, it's a footprint basically captures all this stuff. But this is a phenomenal tool. I like this better. It takes up less work. It requires less work from your computer. And I think aesthetically it's nicer, but it doesn't have sound. But Nomad said that there will be sound coming soon. I won't say specifically because I don't want to he tells me stuff in DM that I'm happy that he shares with me, but I know that this is probably something I'm going to be relying on more in the future. There's some other things coming as well that are awesome, but I definitely don't want to say anything about them. So yeah, CryptoWatch is great. Yeah, I'm not going to look at ADA, dude. I mean, I just mentioned that ADA is... Where is ADA? I don't even have it on my watch list. I do. It doesn't make sense to look at anything if it's not performing. If it's not, this looks like shit. This looks like it's about to make new lows, so I know that's not performing well against Bitcoin. Could it be doing something like this back here? Yeah, maybe, but it's going to have to break upward at this point. So, you know, I don't like to just chart things for the sake of charting them. Like if you're looking at alts and they're not strong against Bitcoin, you're wasting your money, honestly. If you're trading, right? If you're investing, then you're asking the wrong person completely, because I am not I'm not versed in any of the technicals of ADA versus Ethereum or ADA versus, you know, anything else, honestly. So big increase in OI for AVAX. Go to the others. Hold on one sec. Let's add. This is not what I want. Interesting. Some looks like in some of the rotations down, more recently, you have yeah, that open interest going up. Let me look at AVAX on a zoomed out. Jeez, doggy. I mean, so you could see this right here. You have these micro squeezes. So in this rotation down, you have a decent increase in open interest. That gets squeezed, right? 1, 2, 3, squeezed. Increase here, that's long, that gets squeezed. It's like you go from the market panicking, selling, them getting squeezed, then the market thinking, oh my God, okay, this is a long now, them getting squeezed, and now on the move down, you know, them getting squeezed. So it's like, it's longs, shorts committing in mass. And this more recently is, you can see overall though, we're seeing a decline in participation, right? Shifting down lower. So I still think a lot of this market is really afraid to get into position. And it's kind of like everyone's waiting for something big to happen. And that's kind of smart because major changes have occurred. So you should really require, at this point, I'm on to my second drink, and this one is just a seltzer. I was just drinking this. This is really good. This is called Kill Cliff. It's a company made by ex-SEALs. So this goes to the Navy SEAL Foundation. So these are some really good guys. And it's a really healthy energy drink. It has barely any ingredients. It's basically just club soda, some vitamin B, some niacin, potassium, and a little bit of caffeine. But it's a green tea caffeine. So, but anyway, I think you should have pretty strict criteria for getting involved. Like I said, I think that people are kind of tepid and afraid to get in position. I think that's for good reason, because markets are, you know, there's a lot of uncertainty across markets. There's a lot of uncertainty across crypto markets. But we've been here before. Like, that's the overarching point. We've been here before. This is not unique. You have to go through this period, though, where it gets boring. But I mean, by all means, if we look at BTC right here, we could very well set up, and this is just kind of how I look at the chart intraday. I'm looking at the charts more or less lately in either the 15 or on a 30-minute, so to get the overall local context. And then I'm looking at either 1, 3, or the 5, depending on what it is. I haven't really looked at the I haven't looked at a trend reversal chart in a little while. I haven't been using any kind of like volume-based periodicity in a while. I've just kind of fallen back onto the time. It's not a tremendous difference, honestly. If you're using, you know, if you know what you're looking for, you don't need to necessarily look at some kind of volume periodicity. Different periodicities, though, can help people see the market in ways they haven't, because, again, if you use a non-time-based periodicity, you're doing away with a lot of the noise or the candles that are printing off of just inactivity, but it doesn't make a tremendous difference. It just cleans things up. Yeah, so I shorted AVAX. AVAX, so I've been looking at AVAX for a while. What's it called? I want to blow this up a little bit more. So as far as AVAX, I shared this recently. Kind of the similarity between prior structure. And I say, trading on fractals is not something you want to try to do too much of, but it allows you to at least have some kind of strict risk management though, and exit criteria. Because if you're looking at something, you say, oh, this is a fractal very similar to the last, I can start to look for signs that it's going to behave similar to the last, at least how it resolves out of that. Well, once it starts to deviate from what it did in the past, at least like, okay, things have changed. This is not exactly what I thought it was going to be. It's not, a replica of what it was in the past. And as you can imagine, like if we look, I'm sorry, you were off the screen. The chart was off the screen. It's this period. As you can imagine, this was a completely different context, last year than where we are now. QT, rate hikes have actually come down the pipe, recession fears, things completely changing. But if we look at the two structures, there is a similarity in how it has been transpiring so far compared to what took place in the past. And it's not like no matter what, in different contexts, tops and bottoms, they take place based on basically the same behavior, right? Sellers, buyers leaving the market, capitulation taking place, panicky type of behavior, then a long accumulation period, boring period. This behavior doesn't really change over time. Like the thing that people might respond to that creates this behavior might be different from one case to the next. Like you might have a different catalyst for each one, right, or a different cause. But basically, markets at the end of the day, it's you have momentum come into the market. You have one side of the market being really crowded for a long period of time. You have significant flows in the direction of that, and then you begin to unwind that, and you begin to unwind those positions, and you begin to create momentum in the opposite direction that resolves sort of the same way it did on the way up, but on the way down, right? Except on the way up, everyone's happy, on the way down, everyone's sad. But the bottoms, although they might be during different contexts, it's the same behavior by people, right? So I shorted this initially back here, and I shorted it again yesterday, right here. And my idea is, hey, maybe this is bottoming. This would be awesome, right? If we saw, and this would strengthen the argument that we're looking at maybe a longer bear market rally. If we came down here, failed to break down lower, and then we had some kind of double bottom put in, and at that point, if we look at sort of the last one, and you have something like that, and then you throw on some longer term moving averages. Let's put on like a 10 and a 20, honestly, which is pretty useful. Let me change the color. So I think that, considering the trend has changed significantly, moving averages are very useful tools, especially during times like this, especially after you've been well into a downtrend. So, where we are kind of where we were here is kind of where we are right now in terms of market structure, in terms of the 10 and the 20. So if we had something that did this, right, broke down, held this low, and then we flattened out, moving averages flattened out, and then the next thing you know, we're breaking out and we have that crossover, well, you've given, at that point, 3 different signals for the market to get long behind. And ultimately, that's what creates a shift in momentum, right? It's a bunch of confidence coming back into the market. And, the more criteria that you add up, or the more evidence that you add up for reason to be confident, the more buyers that you could bring back in, right? And because this is a higher time frame structure, your position traders, your swing traders, your scalpers, all of them can get behind sort of the same flows. What's the repeated phrase of this stream? Because I keep saying Yes, Sunchi. Yeah, so the problem with AVAX, Jerry, and why it's an easy short, and you alluded to that, is that there's actually more supply coming into the market too. I think there's like, I forgot the unlock that's coming up. It might have already passed, so it might not have completely hit, but either way, what you have to understand is there is overhead supply, right? Let's go to CoinGecko, AVAX. So AVAX is fully diluted valuation, right, is 13.9. Market cap is 5.4. That's a 2x right there. And then the circulating supply is half of, well, that's that's the same thing I just mentioned in a different form though. So you have supply, right, that will hit the market. Solana phone, I ordered it. The Saga, I ordered it. I think Solana still looks decent on the daily. Let me get some of this stuff off the chart. So I said during the stream I'd be happy to trade. I said that as long as BTC is outperforming other things, I'm going to be looking for trades in BTC. So just real quick, we're not taking anything right now. I would rather... So here is a move towards the second. This is a 1-2 standard deviation move, but we're back within value, so we're rotational still. Rather than buy this low, which we missed down here anyway, talking too much, but that's what happens when you're streaming. I can't act like I'm going to be as attentive during the streams as I would be in my own trading, but I don't feel like I'm missing much. If we break above, like I said, something like 21K, POC, VWAPs, we'll look to get long. If we have some kind of further spill down, or if we have a break above, which isn't happening during the stream, a break above 22K, that's where we'll look for positioning. So basically, if we continue to move up now, maybe we'll be able to get put on something. But Solana, as far as Solana goes, I think that, well, one, Solana was showing strength against BTC. Solana has a decent catalyst or narrative to bid now with the Solana phone. But narratives and those kind of catalysts they're falling kind of flat, obviously, because we're in a bear market. So you see like Link, I think was listed on Robinhood, and it retraced it now. But here's the listing pump for Link on Robinhood. So you got a decent pump out of that. So you can still news trade, right, in a bear market, right? So here's your pump, but there's no continuation for these. So you can't say like, oh, Link is listed on, it's not the same as in a bull market where you just hang on to this, and it would take like another week before everyone logged on to Twitter and saw that it was listed and bought it again and piled in. Solana, though, it's still outside of this diagonal, but the momentum is definitely not there like it was previously. And I was mentioning this prior structure as a good reference. It's done this well in the past, obviously, as well, where you've had these descending structures, market structure on the way down pretty clean, and then you have a breakout. You have this crossover, again, moving averages being very useful lately. Momentum dried up towards the low. Again, I started looking at the RSI again to sort of take away less of the eye test measure and just look at it and say, okay, objectively momentum is dried up. Again, like I say about RSI, you could see this in the candles either way. But this is the support you would want to see hold, honestly. The flip of this 20 on the daily. So the blue line, the blue moving average is your 20 period. I mean, this kind of looks like it probably would fail. So I took profit, like I said, though. This is, I saved it so I could see where I ended up taking complete. It was not the top. It was actually, I ended up taking profit right around 41. But everything relies on, listen, we're still in a position where I mean, if you throw BTC on and you put on the S&P, jeez, poor dog. She can't itch herself. Dogs with big ears, they get ear infection, so she has an ear infection too. But if you just look at the S&P, right? So this is a layover. This is today's session. We'll mark off today's session. Where are we? There you go. You know, moves up correspond with moves up in BTC. Moves down, more importantly, correspond with moves down in BTC. It's not like you could see there's some deviations in terms of the magnitude of moves between BTC and the S&P earlier. But once the S&P begins to drop, Bitcoin follows suit right away. I mentioned get sell. I said early, you know, UNFI pumped. I don't know why it pumped. I'll look at it for you though. My guy PBJ holding down the chat. He's like the bouncer at the club right now, saying please behave. I appreciate it. I don't know why this pumped. I don't know what's up with this. But look, you had this massive pump. This was a couple weeks ago now. I honestly couldn't tell you what this is. Let's look at the futures though. I'll put that on. See, I don't like during a time like this, I get people request charts and like not disparaging anybody who asked me to chart something that's like well known but clearly not performing, like ADA. Like I said right away, like ADA shit. Like I know it's not performing good against BTC right now. Performing well. I don't have a problem honestly charting things like this that are kind of anomalistic, that have pumped massively, because it's interesting, right? It's like, why did this pump? I don't know why. You can see that leading up to it, there was a pretty significant squeeze that took place. You had a really large increase, and those lines on the chart, sorry, are the session breaks. So for the days. Look at this. You know, massive increase in open interest, right? And then a huge squeeze. So I don't know if this was some whale positioning and then pumping this and then taking profit. I'm not close enough to this to follow what actually took place, meaning I don't know what actually took place in the flow. Was this a limit sell getting filled, fading this, or was this someone building a position and then taking profit on the way up? It almost it kind of looks like that, right? So just looking at this on a lower time frame, playing detective, it looks like you had someone from here to here build a large position, right? So build a large position, yeah, shilling and closing. That's insane. No, it's all good, get sell. No problem at all, man. This is cool, right? Because you could see what took place. So when you zoomed out, you can't tell. It's like, well, wait. I mean, you're looking usually for, before a squeeze, a good amount of short open interest buildup. But it looks like someone very steadily built a position right here up to here. You know, this is just market maker activity. Normal open interest changes from here to here. And then here, on the way up, slight taking profit, and then selling the entirety of the position back down. So you can imagine that at least what they got was from here, the last major increase in open interest, one sec, to here. So, and you can imagine they closed out more before that, but interesting. Little forensics. Is this again taking place? Same thing. This looks a little bit more abrupt. That last increase in open interest. Maybe this is TWAPing. Because look at the steady climb in price action. So you have a TWAP, time weighted average price, right? It's going to be an algo that, if it's very basic, it'll buy just every X interval of time, right? So usually every 3 minutes, 5 minutes, and it'll buy a certain amount at market. It helps build a position when markets are thick. It's good. It's the opposite of an iceberg, but not the opposite, but different method of gaining entry. But you'll see that there'll be like this pattern that's obvious in terms of the interval in time before it moves up, and the open interest increase will be very steady. So maybe that's what's taking place right here, right now. And if you look at where it's taking place, I mean, from a market structure standpoint, what were these? Just prior lows. That's not the tool I want to use. What's going on? Why is... Oh, I'm holding down. I'm trying to hold down the... That's not working because... Hold on. That line is great. Where's my screen drawing tools that are not part of that? Here we go. So roughly, right? Lows, right? Pre-breakdown. Sort of an under-over, and you have this basing out taking place. Listen, I've been around in prior bear markets. I've seen the weird structures that you get where sometimes this is the first move and this thing just continues to do this, right? So this is the time when you have these, and this is what I said when I mentioned, this is not the time to be shorting alts just across the board unless they're thick names, because there's going to be some really nasty pumps taking place that are orchestrated. And imagine this, right? You're shorting something and you're thinking in terms of liquidation levels, and you're like, oh, I'm still safe down here. I'm still safe at a 50% move. I'm still safe at a 100% move. And then this thing, in a matter of no time, is up beyond any reasonable amount of buffer that you would give yourself to have, to not get margin called and not be liquidated. So thin price ladder. PBJ, man, you are like on top of this stuff. You just started learning this stuff and you absorb all of this, don't you? So PBJ, I notice how fast you learn. I'm just pointing that out. So that is definitely the case. A lot of times what you'll see is and this would be a good time to, let's look at something thin. Hold on one sec. Just changing something. All right, so this is gonna be a little bit of a, maybe I could, hold on, I gotta go to main trade. All right. Now what can I do? I can just pull this over, right? Yeah. Here we go. No, because that's blocking it now. All right, so focus on the right part, the right side of your screen. That's fine. So this is the, hold on a second. Give me 1 second. I got a better idea. I'm trying to make this. There we go. Perfect. Why is that so big? Okay, no. There we go. Kind of in the center, right? Good stuff. Why is that Solana increment so big? Here we go. So the reason why alts most alts move fast is because there's no depth, right? They're really thin. So if we go through, this is just one of my watch lists. So you could see that on the watch list, I have the last price, the bid, the ask, and then the spread percentage. So a lot of the times what you see in things like, for example, how do you pronounce it? Unfi? Unfi? UNFI. Is this even on? Let's see. Oh my God, it is. Let's see. Let's look at this specifically because I thought I was going to have to just do a... So the spread for this is probably going to be... It's not as bad as some things because now there's more people trading it, so more eyes on it, more people making markets in it. But earlier I imagined that it was a lot thinner. But you can see the spread is anywhere from... You might not be able to see it. I'll put it on a DOM. So now it's going to be connected to this. Oh, there you go. There's your spread. So you see how this spread is gapping? The bid and the ask are not like, for example, this. So there's your spread on BTC, right? So notice the spread on BTC. you could see that it's 50 cents wide. Here's your bids. Here's your asks. Here's the volume done at the bid and the ask. So if I see that there's 20 on the ask right now, and then I see 5 hit the ask, it'll take away from that, and you'll see that this is changing, right? The spread though is staying the same. So good market makers, thick market, right? Plenty of liquidity. When you look at UNFI, it's the complete opposite. I would have to collapse this spread and increase the tick value just to make this look like something that's that's standing still. Maybe 10 cents would maybe work. No, that's too big still. Maybe 2. There we go. So I have to actually change the tick setting to make this a little bit tighter. But when you do it just the normal, right, without any kind of augmentation, you can see that this is not a tight market, and there's not a whole lot. Like, for example, let's see some real quick. Let's make this spread. If you have a wide spread, it doesn't take much to move price, right? Because every market order is going to be jumping the spread. It's going to be leaping up the ladder. So let's make this spread. Let's leave it at. Let's make it a penny. So penny spread. Okay. And now if we wanted to buy, let's say $25,000 worth. So that's 4,319 uni. And you're not going to get that on the. So for example, there's less than that listed on the ask right now. And this is an aggregated grouping of ticks. So if I lower this even more, you're going to be, for small orders, it moves the market decently. That's the point. So yeah, this is thickening up. I'm sure it was thinner, honestly, a week ago. But now that all eyes are on it, there's more liquidity in it. But maybe we're seeing another pump beginning. That's the point. Hey, what's up, Mark? Happy you could join. Let's see. Thanks, Joshy. Yeah, we'll take a look at. See, I set the streams up in advance, but then you have to move things around to center some screens. What am I doing? Oh, here we go. This is aggregated, so it's not that big of a deal which one I look at. But let's look at a very low setting. So this honestly looks like, yeah, the behavior in open interest and the behavior in just CVDs with spot CVD and perp CVD moving up. I wouldn't be surprised if we see another squeeze building. And you're starting to see, so this is funding right here. That is definitely negative. If we put on like predictive, which is more, it's going to be integrating more basis. You see it'll begin to go negative before it actually shows up on actual funding. Interesting. So you have some selling up. I wouldn't be surprised if this is beginning another squeeze. But look at that difference in. So it almost looks like maybe perps are selling up here, but spot is continuing to buy. So I got to zoom in. Make sure you guys are still tracking on the screen. I wish this went lower. So here's your CVDs. Perp CVD flat up here. Spot CVD continuing up. Yeah, we probably are flagging and then continue to push. Interesting, very interesting. Huh. See, the last time this happened, if you look at what we're seeing right now, it kind of implies, I wouldn't expect maybe that this continues straight up from here. Maybe you get more of a flag over time, over the next couple of hours, and then you have your shorts that accumulate by people fading that move. Oh, sorry. And then you get another squeeze. We'll see. Who knows? Is there anything else I want to cover? We're on an hour and a half in. I have a call in today at 4. I rescheduled it. And a funny story about that. I'm sorry about that, by the way. I'm gonna change the call in schedule, because right now I have it on Tuesdays, Thursdays, and Fridays, which doesn't make sense, because although it's great to have 3 call-ins, Thursday and Friday call-in, it's like, what's different, right? We're doing a call-in on Thursday. Maybe something happens that's worth talking about on Friday. But the odds are, I mean, it feels like the last Friday call-ins I've done, I've been like, what are we going to talk about? We talked about everything yesterday. So it's a clearly better idea to have things more evenly spread. So there's going to be a call-in today at 4, and then a call-in on Thursday, and then I think we'll do a Sunday call-in. So I think a Sunday call-in would be good, honestly, because, and you know, I'm sorry, some of you guys, maybe Sunday's your day off, but call-in's not like really intensive. It's like an hour long. But it'd be good to do a Sunday call-in because sort of pre-market setup, you know, breaking down what's happening during futures open maybe. So maybe we'll do it later on Sunday. Maybe we'll do it before futures open on Sunday to talk about, you know, plans moving forward. But at least it would be Sunday, day off on Monday, Tuesday, day off on Wednesday, and then Thursday. And then you get your Friday and your Saturday off. And you don't have to worry about hearing my voice. So one thing, so as you guys, just to cover something really quickly. Yeah, because Sundays you have the futures market open. So what I'm looking at right now, so I've always mentioned that it's good to use standard deviation bands on VWAP. So from time to time you'll see me share this sometimes, but I've always had these indicators on the chart, right? So there's sometimes when I stream and I'll leave it off because a lot of times I don't like the way things look when it's too cluttered. But there's tools that I always have, and standard deviation bands and VWAP, that's one of those tools that I always have on the chart. VWAP is just something that, you know, it's showing you where most of the risk has been tagged on average. The standard deviation band, so one standard deviation of VWAP, you could think of this as value and how it's developing over time. So when I'm looking at profiles, so if we're looking at, these are daily profiles, right? And you have your value area high, value area low, and then you look at something like yesterday's value area high, yesterday's value area low. This is giving you context, right? So we know that we're still within value, we're still rotational in prior day structures. You have imbalances, but they get faded right away. You're getting some responsive activity, but you're not really seeing developing value unfold the same way that you can when you're looking at something like VWAP with standard deviation bands. So if we look at today and yesterday now with the standard deviation bands, you can see how these line up with value area high and value area low. So again, value area high, value area low, and then on the VWAP, you'll see value area high and then value area low. And I have the 1 and 2 standard deviation bands as the area that I look to, but value really is developing between them. So are you seeing, you know, in relation to previous context, this is how you're thinking of it. So in relation to yesterday's profile, right, and the day before's profile and what has transpired in the week prior, how is value developing today? Are we holding the top side of value, right? Are we holding the low of value, right? Are we showing strength in a trend up or a trend down? Or are we in the center and are we more rotational and are we chopping? So that's the benefit of looking at this, because you're seeing how value is transitioning over the day. Whereas when you're looking at a profile, you can see how it's developing, but it's not really a fluid representation. Whereas a VWAP with a 1 standard and even a 2 standard deviation band at the high and the low, and then I have them filled in, is a really good way of looking at that. And one way that you could think about using this is when we have, let's say, a period of balance like we have, right? So we have 2 days that are imbalanced within each other, but balanced in total. If you're looking for a breakout, so this is ETH, so we'll go to BTC because I was talking about that more specifically because I think, again, as long as ETH is underperforming BTC, I'm not focused on it. When you have, let's say, criteria such as the 2100, that'd be a bad day for BTC, or the lows. We have this inside structure. So far, okay, just to be clear, we have 7 hours left in the day. Let's create a setup, just a hypothetical. 7 hours left in the day. The yesterday's low. Okay, so one sec. Here is the last 2 days. So here's today. Here's yesterday. Yesterday's low is below, right? Yesterday's high is above. So that means we have we're making an inside day. So low, high. So inside day is a balanced structure. It's a really good setup as far as actionable setups go for BTC. As long as we're rotational, this is a good setup because it's like a break from balance, right? So if we've been balanced for the majority of the last few days within this region, and then you have this inside day setup, a break of, and I said I would take this trade here, right? But just to talk about the inside day, a break of, let's say 21.55 or break of yesterday's lows usually leads to a decent initial leg, right? So you could take advantage of the first side of that trade. For that occurring, when it's occurring within balance, right? So the last 2 days, looking at this is valuable because if we start to move down, let me just put this on like a 5-minute chart. If we start to move down below yesterday's low and we get a pullback and value is moving down and we're respecting value at the extreme, sorry, I keep talking before I'm checking to make sure. Why is this not perfectly aligned? Oh, because I moved the screen, sorry. Okie-dokie. There we go. So let's say we get a break. Here we go. We get a break below yesterday's low. Value is moving down. And you're looking for an entry. A pullback to where value is developing, the value area low is developing, is usually a good area to get involved. So, some people are looking to just sell the breakdown. So sell that breakdown. Some people are looking for the, retest. But you might not get that, right? You might not necessarily get a retest. That's a risk you take. So sometimes, selling the breakdown pays. I think more often than not, you get some kind of pullback. But usually one of the better areas to act would be, in this case, the value area low of the structure as it's developing. So again, I'm kind of drawing how these might transition. So if you're pulling back below and you're retesting somewhere within here and you get that breakdown, might be a good area to sell and place a stop for that expansion, which at that point, again, like I said, probably takes you back down to 20K. All right. Rotational, you're back within today's value. You're hanging out around the VWAP. You're in the middle of a range. Not necessarily the best area to get involved. When you have, though, like I said, and I'll draw it out so it's a little clearer. Let's say you have multiple days of balance. So you're looking at this as your context. So one chart, you're looking at, your value area, and let's say that this is today. And then on another chart, you have, here's your price action within. But you're looking at, your VWAP and your VWAP standard deviation bands. The break, let's say you break above, you would want to see that as that value is expanding, that you're holding towards the top of it, right? Because you want to remain sort of imbalanced extreme. You want to remain imbalanced if you're going to say that this is not going to return to balance. So you want to look for, basically, if you're looking at VWAP standard deviation bands and you're breaking up and out, you would want to see that you're favoring wherever this is developing. Wherever this is developing, right, in the breakout. Because you'll see, you'll get, for example, breaking above highs, you'll get pullbacks within here that are good setups to get long off of. And it's showing you how value is transitioning. And the point of it is it's showing you in a little bit more of a fluid manner, rather than when you're looking at a TPO chart, what you're seeing in the TPO chart or the volume profile, you might see, and unless you have a really granular or low tick setting, you're not really going to see those lines move too much. Like if you have a high tick setting, you're not going to see the value area high or value area low move too much if price hasn't moved drastically itself. And if you're waiting for price to drastically move itself before confirming the value is shifting, well then the trade might actually be in the rear view at that point. Merritt Black teaches this. Merritt Black is actually someone who is one of the better profile and order flow traders, and he's originally from S&B Capital, so I've known Merritt now for a while. But this is a pretty common way to trade using profile and using VWAP. So for anyone who's asked in the past, hey, why do you use VWAP standard deviation bands? This is a little bit more of a concrete explanation of that. All right, does anyone have any questions, guys? Otherwise, we will wrap it up. I don't know if it takes, Monday's low. I don't, crypto has been, obviously it's followed legacy more strongly, and so legacy cash open, you would think that if that has a strong bearing on legacy and BTC was following it strongly, that it'd be at a good level to act off of. But if we look at Monday's low, that's yesterday, right? I don't think it's, the way I just talk about it to myself rather is I'm not thinking like, oh, it's Monday's low, it's just yesterday's low. And it's an inside day structure, so I'm not like betting that we're going to take it. It's just an area that I'm looking toward. SMB footprint course. So I know SMB has a bunch of courses because Insilico shared a folder a long time ago. He shared all of SMB's, Dante's. So you definitely, before you pay for anything, you want to take advantage of all the free shit you can get. And that's even if you could get the stuff that's free because it's pirated. If you don't have to spend money, don't spend money. I think, so when it comes to paid stuff, so I released a course, this is going back 2 years ago now, and we released it for like $49. Originally it was like $39 and then $49. And it's because it is like, it's years of my experience, but it's curated stuff that you could put together on your own. But if you buy a course, you're having someone package that all for you, right? You are having them curate it, and it makes it much more digestible. When it comes to paying for things, there is something to be said for paying for someone's attention, right? So if you have someone's attention constantly, if you're able to look on someone and lean on someone like a mentor. So courses that don't allow you to have that, like if you're not part of a community, so I think SMB, they had a course, but I don't know if they had a community, try to get that course for free. Because ultimately, the course is going to be marked up to be so expensive, and I don't think you're going to be able to access those people. So the cost is not really justified where, if you create a course and you make yourself accessible and you're a mentor, then I could see paying that kind of money. Most of this stuff that's out, that's, like I know SMB is probably really expensive. That's why I'm saying this. So try to get it for free by getting the pirated version first. The new golf clubs are amazing. I actually got to hit them yesterday. I went to the range when the rain pulled back a little. If funding for a coin is 20 basis points, if funding for a coin is 20 basis points, 0.2, that's really high. That's really high. You could liquidate a 100x position in a matter of sessions. Do you mean maybe 2 basis points? So 20 basis points or 2, it doesn't matter. Aside from one being really extreme. And if you analyze that, it'd be nuts. Positive means longs are paying shorts. So the funding mechanism is an incentive mechanism to keep markets in line. Like you're trying to keep, you have crypto, you have a lot of fragmentation. It's not centralized like the CME. You have Binance, you have, FTX, you have Bybit, Phemex, you have Deribit, you have, think of all the derivative exchanges that now also have spot exchanges. But all those derivative exchanges, it's a derivative of BTC, which is the spot market. And you have to base that price off the spot market price, and it's based on oracles. So you'll have like Bitstamp, Binance, Coinbase, Kraken, all, there's 6 of them, I think, that make up the oracles, that make up the index price that they have to be tied to. Now, you have market makers keeping prices in line. You have buyers and sellers providing liquidity, but the funding is the incentive mechanism that helps keep the prices in line even more. Because if you have, let's say you have a market that's really long, in a bull market, it's going to be more long favored than anything else, aggressively, from an aggressive standpoint. It's going to be very difficult to keep the perp price, the futures price, at the spot price when the perp is being bought with notional, when being bought with leverage and much more inflated, right? It has a potential rather to be much more inflated. So to keep that market in line, you have to give an incentive to sellers or people to sell out of longs or sell into shorts to close that gap. So that's when the market is, let's say it's a long market, we'll just call it a long market when it's dominantly long, when it's dominantly positive funding. You pay shorts to get in a position, or you pay longs to close out. Because if you help them avoid paying by closing out. So positive funding means that long pay shorts, longs pay shorts. And negative funding means that shorts pay longs. And you'll see that this will be arbed, and this is why the prices will stay relatively in line. So this indicator is just a VWAP standard deviation band indicator. I've had it forever now. You guys have seen me share it on the weekly. You've seen me share it on the daily too. But these are the settings I have on for the daily. So just upper, lower, 2, right? So 1 standard deviation and then 2. My settings are not the generic ones. So the generic settings for the 1 standard, the generic settings for 1, so for this, I think it's higher than 1. I think it's like 1.18 or 1.16 or something. It's not 1. So I made this 1 standard deviation up and below. And then I just have it filled in. So you'll see that down here in style. So overbought fill, oversold fill. That's where you're getting that gray background, which actually I'm going to lighten that up a little bit anyway. So the DOM is Quant Tower. So I've been using the same tools now forever, guys. You guys have seen these multiple times now. So feel free to ask for the settings anytime. No, I try not to trade too much at night. It's the summer. It's a bear market. I'm not trying to pull. I'm not in a position where I need to try to squeeze too much out of this market right now. So I'd much rather pick and choose my times to trade. And night times for me just doesn't make a lot of sense. I got a pregnant wife now. But I think that'll be it, guys. I'm going to wrap it up. It's almost 1 p.m. We've been doing this for like an hour and 45 minutes. Yeah, so I think I pretty clearly went over the areas that I'd want to get involved. Price is rotational right now, so you could treat it like it's going to continue to be balanced. So you're looking to fade extremes. So for example, today fading off of the lower of this. It's fading off of, if we're looking at Ethereum, we're looking at yesterday's value area low, in that region. So that works until it doesn't, right? So looking to value area high, value area low for absorption. If this is going to continue like it did in the past, beginning of this year, where you have this structure that looks remotely similar, roughly similar, then this higher low, again, you can still get involved even if it's late off of this low. So, like I said, 21K. If we're trading above 21K, we're above yesterday's VWAP. We're more or less back at the high of today's value. At that point, you're looking kind of imbalanced up, favoring yesterday's value area high. So something like this, holding here. And then you have this structure in play. And again, the last low was choppy. I would just anticipate that if we're back here, that you're taking these highs again. Okay. All right. Everyone have a great day. I'm going on call-in for half an hour today at 4 p.m. So hop on, ask questions quickly. We'll shoot the stuff for a little bit, and then it'll be a day off, and I'll see you again on Wednesday. Take care.